With the Naira under pressure yesterday, dropping almost 1% against the dollar, even as the central bank poured more money into the market to try to lift the currency. And we also had dollar sales from oil company Shell. Leke Sule is a trader at Mansard. He joins me to review that market. Thanks, Leke. I think perhaps let's begin with the suggestion that things can maybe get better from here on, because we've seen oil prices ticking up around that $50 a barrel level, and now we're sitting around 55, and the suggestion from some people is that this is as low as you can go, because you're beginning to see the oil majors cutting back on capex. Is that filtering through into sentiment that's positive for the Naira and for the Nigerian market as a whole?
Yes, thank you. Good morning. I'd actually said earlier that keeping oil prices being low for a protracted period of time actually poses a risk of higher oil prices in the future. We've seen ConocoPhillips, Shell, and many oil majors.
Sasol in South Africa,
exactly.
I saw the other day are cutting back on their Louisiana plant.
Exactly, that's pretty massive. And there was also a report by the Saudi oil minister that we might see crude at $200 per barrel if oil remains this low.
Though I thought he was talking up his book.
True. But of course, at $200 per barrel, more shale oil company guys are going to come in anyway.
Yeah.
But we should actually take it quite seriously. Oil price could actually spike after this protracted price route. But that being said, right now with oil price at around $50 per barrel, all stockpiles are actually increasing.
Yeah.
Again, last week, about 45 minutes to the close of markets in the U.S. market on Friday, because we came out with a report that about 94 oil rigs were idled.
Yes.
So that was actually what started the rebound.
Right.
So oil actually gained to about 52.99 late on Friday. Then topped 55, then above 55 this morning as well.
Yeah. So oil could be on the way up. Could the Naira be on the way up as well?
Well, for the Naira, there are risks. You know, our 2015 budget is actually cut at around $65 per barrel.
Yeah.
So if oil still remains low, below $65 per barrel, we'll still be running deficits. So there'll still be risks. But, you know, I really believe what we need is stability in oil prices. Even if it stays stable at around $50–55 per barrel, then that will give investors more comfort. Then, you know, about the Naira as well, we're not really as concerned about the level of Naira, about where Naira actually is. Right. We're actually more concerned about the stability of prices. Even if Naira is at 200 Naira per dollar, how stable is it? How sustainable is that level? So once we see some level of certainty, we'll start seeing more inflows.
Absolutely. So we've been talking about this positive picture around oil prices to a degree. It's certainly more positive than it has been. I mean, I remember seeing a forecast, I think no less from JP Morgan, suggesting that we could see $30 a barrel oil. Well, it hasn't quite panned out yet, but who knows? But so the general picture around oil seems to be brightening a little bit. But at the same time, this week, as well as last week, we continue to see the Naira under pressure. The central bank having to come in and prop up the currency outside of the auctions. What is that saying to you about what people are projecting as the future path of the Naira?
Well, the CBN has really done a great deal in defending the Naira. They've taken quite a number of demand from the IRDAs to the interbank market, so that has actually added to the pressure in the interbank markets. On the other hand, they've also reduced the pressure in the interbank market by stopping banks from selling interbank FX to BDCs, to the parallel market. So the pressure, the depreciation, the larger part of depreciation has actually moved to the parallel market. We've seen parallel market levels at around 210, 215 to $1, whereas interbank has remained a little bit stable around 189 Naira per dollar. So anytime we see dollar sales by oil majors, the currency actually appreciates a little bit to around 189, 180. It actually dipped as low as 188.60 yesterday before it went back up, you know, on the back of CBN intervention and oil companies, so mainly Shell. So we'll keep seeing those kind of flows. So once those flows come, the currency will appreciate a little, then demand will trickle in again. And again, there are still some unmet demands in the IRDAs, the official window. So some of them are seeping into the interbank market, right? So Really, the way it is, at the RDAS auction, the demands we're seeing, we're actually seeing forward demands, right?
Right.
We're seeing people bringing forward their demand. Like if you have demand for, like what the CBN governor actually alluded to at the previous interview what he had with him, where he said, if you need 1 pen, you're ordering 5 pens because of a future expectation.
You anticipate that the cost may well go up, so you want to protect yourself.
Exactly. So what the CBN is doing about that is selling FX forwards, so that actually quells your future views of negative.
And of course, that's where everybody's trying to coalesce, is to understand where the currency is going from here. It was interesting the other day to read the former governor of the central bank, Mr. Soludo, talking about the fact that he is worried, of course, about what's happening in the country and the decline in the naira. And he was talking about the fact that he was now being forced to buy naira at 215. So it takes time for that weakening to trickle down in, that support to trickle down to the rest of the market. So I wonder, let's look for the rest of the week. What are you guys forecasting for the rest of the week for the naira against the dollar?
Yeah, the naira.
Give me a range, please.
Yes. Yeah. Between 188.50 and 190.
188.50. So really little change. We're beginning to see some kind of stability.
Yes, because we expect CBN to continue defending the naira, and we still see more oil company sales. And for naira 215, you only get naira, dollar 215 at the parallel market.
This is the parallel market. Yes.
Exactly.
Yeah, you're right.
So if you have an eligible,
if
you have an eligible transaction, like you need to order anything online, or you need to pay school fees or whatever, there's interbank market for you at 189. So if you need a barometer to measure the CBN, use the worst case, you use the interbank market, and best case, you use the RDAS, which is your official window. The parallel market, if you have any eligible transaction, you go to the interbank.
I think you're giving me a story here. I'm wondering what the former central bank governor was buying to buy at 250. That's a story for another day. Let's move over and talk fixed income. Now, that market, of course, has to a large degree mirrored what we've been seeing on the naira side. Are we beginning to see those yields coming back a little bit?
Well, fixed income has been quite interesting. We actually saw the 2024, the 10-year bond dip to sub 15 levels. Local demand mainly. Some PFs actually came in to buy. So yields are becoming quite attractive to them because some people are of the view that, especially if you have naira obligations, you are a fund manager, right? So you can see this level of yield, and you really see value in the yields. But if you're a foreign investor, elections are coming. We can actually allude to what happened in the Kenya worst case, right? The Kenyan election, the previous one before the last one, right? Yeah. So that's the worst case. Maybe some post-election violence, and there will likely be stability. But we're hoping for a hitch-free election, and afterwards. So I actually think now is the trade, right? As we go towards the election, and again, T-bill auction is coming. There's going to be
so that continues to exert pressure on the market. People are still watching those elections and thinking what's going on.
Yes, but for a local investor, I really see nothing to worry about. Yes, yields are wonderful.
Well, we've got an update from INEC, that's the Independent Electoral Commission, later, I think today or tomorrow, where I don't know what they're going to say about the elections. But certainly the market has been keeping a watch on that election clock.
Yeah, I think a lot of the risks have been priced in.
Right, it's done.
Yeah, to a very large extent. Volumes have really thinned out, even in the equities market, in the fixed income market, the volumes have really thinned out. On the 2016 bond, just about 300 million went in yesterday. So volumes have really thinned out. And again, on the 2024 bond, a lot of dealers are short. Yeah. Because PFAs came to buy, and dealers actually went short on them. There's going to be a bond auction next week, so they hope to cover the auction. So. And again, just probably some foreign investors may want to sell towards the election, because bond auction is going to be held on 11th, election is 14th. Yeah. So it's just perfect timing. And I actually think that's where the trade is.
Absolutely. Well, we'll be watching that space. Thanks very much indeed, Leke Sulet, for coming through to the studio and chatting to us about the fixed income market as well as the Naira.